Hey there, it's Ken here. Welcome back to the channel where we break down the latest Tesla news for investors, owners, and fans of Elon Musk. Today, we've got some crucial updates you don't want to miss. It's May 2025, and there's been a lot going on with Tesla lately. Production adjustments, political maneuvers, and risks and opportunities in the Chinese market. We're covering it all. But how will these developments impact the value of your Tesla shares or the delivery of your new Tesla vehicle? Stick around to find out. In today's video, we're diving deep into Elon Musk's controversial role at the Department of Government Efficiency, DOGE, the production halt at the Austin factory, and what it all means for Tesla investors. By the end of this video, you'll have a clearer perspective on where Tesla is headed and how to make smarter decisions as a shareholder or an owner. Let's get started. Let's begin with Tesla's current situation as of May 2025. Over the past few months, Tesla has been making some notable production adjustments. One of the biggest changes? A planned production halt at the Austin factory during Memorial Day week. For those unfamiliar, Memorial Day is a federal holiday in the US, observed on the last Monday of May to honor military personnel who died in service. It's a significant holiday when many businesses and schools close. So, why is Tesla pausing production of the Model Y and Cybertruck during such a pivotal time? Is it a routine adjustment, or is there something more serious going on? Well, here's the deal. This production halt is unusual. It didn't happen last year, and industry insiders are speculating that it's a response to rising inventory levels. In the first quarter of 2025 alone, Tesla's unsold inventory reportedly surged to around 26,000 vehicles. That's a lot of cars sitting in stock, indicating that demand may not be keeping pace with production. Since February, there have also been reports of reduced overtime and early dismissals at the Austin plant. On the surface, it might look like a cost-cutting move, but it could also signal deeper concerns about dwindling demand and rising costs. Additionally, in April, Tesla lowered its Cybertruck production targets, and some workers were reassigned to other departments. So, what does this all mean for Tesla's strategy and its investors, and how should you, as a shareholder, interpret these moves? In the first quarter of 2025, Tesla's deliveries dropped by 13% compared to the same period last year. Meanwhile, vehicle inventory continues to build up. The key question now is whether Tesla can effectively manage this inventory without significantly impacting its bottom line. If Tesla can successfully clear its backlog and reignite demand, we might see a rebound in the stock price. But if production slowdowns and inventory buildup persist, it could spell trouble for Tesla's valuation. For Tesla owners, the implications are also significant. Those awaiting delivery might face further delays, especially for the Cybertruck. For US customers with Cybertruck reservations, it's worth keeping a close eye on these production adjustments. Now let's shift gears and talk about Elon Musk's political moves and how they might affect Tesla. Now let's shift our focus to Tesla's position in the Chinese market, a critical production hub and at the same time a rising risk factor. Currently, Tesla's Gigafactory in Shanghai is responsible for over half of its annual production volume. However, as tensions between the US and China escalate, the risks associated with this facility are becoming more apparent. For instance, there's speculation that the Chinese government may impose new regulations on Tesla. Concerns are growing that the cameras and sensors in Tesla vehicles could be used to collect sensitive data. If China tightens restrictions under the guise of national security, it could significantly impact Tesla's sales and production in the region. Adding to the concerns, reports indicate that inventory is piling up at the Shanghai plant. In the first quarter of 2025, approximately 26,000 vehicles remained unsold, a potential sign of waning demand. One key factor to watch here is Tesla's pricing strategy in China. While lowering prices could temporarily boost demand, it might also squeeze profit margins. The challenge for Tesla is maintaining profitability while increasing sales, a delicate balancing act. Another issue to consider: Elon Musk's role in the US government. Serving as the head of the Department of Government Efficiency under the Trump administration could complicate Tesla's relationship with China. If Musk is perceived as aligning too closely with US policy, it could put Tesla's operations in China at risk. For Tesla owners, this situation is also worth watching closely. If China ramps up regulations, it could delay deliveries and disrupt the supply chain. Those waiting for new models, especially in the US, should keep an eye on potential delivery delays. From an investor's perspective, Tesla's heavy reliance on the Chinese market presents both a risk and an opportunity. If the Chinese government relaxes regulations and encourages EV adoption, Tesla could see a substantial boost. However, if restrictions tighten, it could put downward pressure on the stock. In summary, the Chinese market remains a double-edged sword for Tesla. Staying informed about US-China relations and Tesla's pricing strategies will be crucial for investors and owners alike. Alright, that's it for today's Tesla update. Let's quickly recap the key takeaways and what actions you can take as a Tesla owner or investor. First, let's talk about the Austin factory production halt. The Memorial Day week production pause is aimed at adjusting inventory and cutting costs, but for those waiting on deliveries, it could mean further delays. Especially for Cybertruck reservation holders, stay tuned for updates from Tesla regarding delivery timelines. For investors, the key point here is inventory buildup. With 26,000 unsold vehicles piling up, demand could be softening. Keep an eye on upcoming earnings reports and delivery updates. If Tesla successfully clears this inventory and demand picks up, we could see a rebound in the stock price. Now, regarding Elon Musk's political activities, his role at the Department of Government Efficiency could either accelerate regulatory approvals for Tesla's self-driving tech or backfire if legal challenges mount. Investors should watch closely for any developments on the lawsuit front. And finally, let's circle back to the Chinese market. If Beijing imposes stricter regulations, Tesla's production and delivery schedules could face disruptions. On the flip side, if the government supports EV growth, it could be a game changer for Tesla's bottom line. To sum up, Tesla is currently navigating a complex landscape of risks and opportunities. For owners, stay updated on delivery timelines and FSD developments. For investors, monitor production adjustments and Chinese market conditions closely. These will be pivotal in shaping Tesla's trajectory in the coming months. Alright, that's all for today's video. If you found this update valuable, hit the like button and consider subscribing. I cover Tesla news and insights every single day, so you won't miss a beat. Thanks for watching, and I'll catch you in the next one. Stay charged and keep enjoying the Tesla life.